couple of months ago, you would have received an invitation from CR2 saying, we're going to have a conference in Dubai, please put it in your diary and come. And lo and behold, today we're here. So, as we stand and sit here today, what I would like to do is to make 2 more invitations of you. Number 1 is just to have a think about how we're going to sharing experiences, as Anna said, bringing home 1 or 2 connections that we've made. And look, we're in an intimate atmosphere here, We can share things, and that's what's going to get us more benefit from the conference for everybody. And the second invitation I want to have a think about is that single step. We all know the phrase, the journey of 1,000 miles must begin with a single step. And I ask you to think about that as we go through the couple of days that we have here together. What is that single next step that we're all trying to make to improve our businesses? So I extend that invitation to you today. So as I was thinking about how do I introduce myself, because some of you will know me and some of you don't. So I said, look at what was my steps. So I said, maybe I'll just discuss my career a little bit with you. So as a boy, I joined Bank of Ireland, 1986, I think it was. Felt a long time ago. And I joined as an ATM programmer. So some of you in the audience will be very familiar with that. I won't even go back to the languages we were using back then because people wouldn't even remember them. But spent 12 great years at Bank of Ireland, started off as a programmer, and did lots of different things. Fantastic opportunity that I had there. Ran the consumer lending business at the end, so went through many of the trials and tribulations people in the audience have here. And then with some parallels of what's happened recently with the growth in fintechs, they weren't called fintechs back then, they were actually called .com companies. So I left Bank of Ireland, went to London with a friend, and we started a .com company called Moneygator.com, financial services aggregator. So what an experience. Spent 3 months raising money, like lots of people today, $20 million. We weren't quite a unicorn because they weren't invented then, but we felt like a unicorn. And then 2 years later, I sold the shares. So lots of the same journey that many fintechs have been on, but what an experience it was. So then I went back to let's call it the corporate world, joined NCR, spent 5 years at NCR in their self-service division, working on many kind of things that are still happening today, like deposit automation, advanced ATM services, looking at how self-service could solve problems in branch for cost efficiencies, et cetera, et cetera. So spent really an enjoyable period of time traveling the world and getting a lot of experiences with NCR. Then I joined a small company that people won't know, Transaction Network Services, a US company. But the division that I ran was our e-commerce payment gateway. And our biggest customer in that business was actually MasterCard. So people will probably remember the software called MIGS. So MIGS was owned by Transaction Network Services. So I ran that business, growing that business as the e-commerce business grew right around the world. And in 2014, I sold that business to MasterCard and then ran the e-commerce business for MasterCard in Europe for 3 or 4 years. And then the opportunity came to lead CR2. So when the chairman approached me about it, and he said, come and have a look, what do you think? So I said, who are your customers? I couldn't believe the roster of companies that CR2 had, an impressive set of technologies, and I got to meet some fantastic people. So today I stand here really, really proud to be leading the company that is CR2. So that's my journey. So I thought maybe I'd give a few lessons that I learned, because I always think I'm still young, but somebody said, no, Fintan, you're a veteran. You've spent 35 years in this industry. You definitely classify as a veteran. So I was thinking, okay, what are some of the lessons that I've learned along the way that probably are still relevant today? So I'm going to share some of those with you. The first one is around teamwork. So I think it's more important than ever, because of changes in technologies, because of complexities in value chains, that a lot of companies now are realizing that teamwork, partnership, collaboration, alliances is the way and the new way of gaining competitive advantage. So I remember running, when I started to work in payments, in merchant acquiring, trying to understand the value chain, all the different players that was involved, from trying to get the merchants up and running, trying to get the schemes certified, trying to get settlement organized, trying to get a chargeback partner, all of the things that you try to do in that value chain. It's extremely complex, as we know. And that taught me a really important lesson, that collaboration and alliances and getting people working together in a win-win situation is really, really important. So that was a lesson about teamwork, and I think it's as important as ever today. And I've heard somebody saying recently that, as companies develop core competences, that Michael Porter phrase, that being able to build and maintain partnerships is becoming a key core competence of companies today. The second lesson that I learned, and I continue to learn, is about competition. There's always somebody tackling you from whichever position or whatever style that they're coming from. Traditionally, I guess competition would be, let's say, people in similar positions. Let's say in banking, in Bank of Ireland, it was AIB and Ulster Bank were our big competitions. We knew who they were, we knew who they were coming from. The basis of competition was roughly the same. But today we're seeing competition from many, many different areas. So different industry competitors, so mobile companies or telecom companies trying to eat the lunch of financial services companies. We have monoline competitors, whether that's in merchant acquiring or credit card issuing or buy now, pay later, looking at how do they tackle and eat some of the lunch of the banks today. We're seeing people competing with different elements of technology and using technology as a base of competition. I guess that will be a key theme over the next few days when we look at the impact of fintechs are having on the financial services industry, the good and bad sides of that, and how we should be responding to that. So competition is a constant. It's a phrase that's always been used, but it's something that I think we all need to think about, is where is the competition coming from today? And I know when Henry speaks later on, he'll start to challenge us in terms of where we think the competition is going to come from in the future, and making sure that we're fit as companies to be able to prepare for that competition. And the last lesson then I would describe as something around moving forward. So staying where you are is kind of rarely a good strategy, certainly over the medium and longer term. So we've seen many companies on the road to despair, let's call it. So Blockbuster, did they see what Netflix was going to do? Yahoo, did they believe that Google would have better technology for search? Did Kodak really understand the impact of digital photography and mobile phones? And Nokia, exactly the same. Did they see what was going to happen with Apple? Did they appreciate it? And I suppose when we think about, when I was putting the slide together, who is going to be on this road over the next 5 and 10 years? And we all need to be prepared that if you're standing still, you're probably losing. So making sure that theme we're trying to bring forward of taking that next step to move forward is very important in terms of executing strategies. And us as leaders in this room need to be prepared for that. Do we know what the next step we need to take is? Yes, it can be confusing. There's lots of competing priorities. But taking that next step is really, really important. So I just wanted to give a quick kind of segue into the whole world of change. And it used to be a slogan, change is the only constant. People would see it on a car or something and say, yeah, but now that's just, people don't even think of it as a slogan. They know it's actually true, that it is something that's constantly out there. And we see it all the time. If you think about in kind of a quick pest analysis, there's all the political changes that's going on, both global and local, that we're all trying to think about and figure out a way through and address. There's the economic challenges that people are facing. We're seeing with the economic crisis today, we're seeing, interest rates going up. We're seeing inflation increasing at the same time, which is really, really unusual. We're trying to expand and trade cross-border. We're seeing exchange rates fluctuating all the time. We're seeing the strength of the dollar. So all these changes that we're all trying to grapple with at the same time under the heading of economic. And then on social, as we're kind of setting strategies for our business, We're trying to work out what's happening on the social side. We're seeing a significant increase in urbanization, but at the same time, we need to be able to support our rural communities. We're seeing population growth, and COP27 in Egypt is trying to figure out what to do about the environment. So all of these social changes that are going on, and they have to be given into the context of the strategies we're setting as leaders. And then finally, technology. Yeah? So we know that the changing pace of technology is just increasing. So we're going to be now grappling with, is it AI or robotics? Is it going to be nanotechnology? What's going to happen with fusion? I know Henry is going to talk to us about crypto and Bitcoin and stable coins and all those different things that's happening on the tech side as well. But one thing is for sure, that digital growth is definitely something from a technology sense that is not just kind of becoming a technology, it's now embedded in everything. So I want to spend a little bit of time sharing some insights that I've prepared in terms of the opportunity that's still there for us as leaders to be able to drive and grow our businesses with this digital opportunity. So just share a couple of charts. So the first one, it's been mentioned, you know, we're back after COVID, but what is the change, or what does it look like from a digital perspective? So we would have seen a kind of a fairly steady growth in adoption of digital over a period of time. But then we have this non-linear change between December and July, completely driven by the pandemic. I was thinking about something, a good example of this. You know, during my long career, one of the things that I did work on was the introduction of the first debit card in Ireland, and that was the replacement for a thing called checks, for people who remember that. But I was thinking about all the different incentives that we had to give the participants for that. You know, incentivizing the merchants to say, give up checks because they were getting paid for them, so they wanted the same fees for their debit cards. We had to incentivize consumers as well. You know, take a card versus a check, a lot of education. So all those incentives that we had to bring over a long period of time to drive a change like this that happened overnight, because the incentives became immediate, that people were not able to do the way they'd done it before. So the main message for me from this is, first of all, it was a global phenomenon and is. Secondly, you can see it's past the tipping point, and now it's going to be persistent. And the message I would give is the investment that's required to continue to do this and persist with this change is really, really important. The second chart, there's two messages in this chart. The first message is the change happened almost doubling between digitally active banking customers between 2015 and 2019. It was growing around 3%, but in 2020 it doubled and it grew around 6%. So that's the first message. And I know there's different local views on this in different local. For example, Egypt, I think, has grown much faster than this, as an example. But the second message is, it wasn't just, let's call it, the simple transactions that were being done digitally. The fastest increase was in product sales. So the holy grail of what people were looking for is, how do I capture valuable sales transaction, product increases, product penetration, bringing new segments into digital? That all happened during the pandemic, and that was the fastest growing segment of digital penetration during the pandemic. So it's happening, and it's happening across all different transaction sets. The next thing I just want to share is, this is a chart from McKinsey, and apologies anybody from McKinsey is in the audience, but they describe what they call the digital frontier gap. So it looks like at different industries, what is the level of penetration in digital across different industries? And you can see travel is probably the highest, around just more than 50% of the total travel industry has been digitized. But if we look back up at financial services, it's still less than 30%, around 30% of the opportunity for digital transformation and digital penetration in financial services has been captured. And the drivers to help you close that gap are very significant in financial services. So revenue generation, cost efficiency, cost takeout, digitizing the workforce, all of these drivers are really, really important to help us as leaders figure out, how do we close the digital frontier gap in our industry of financial services? And clearly technology is going to play the most critical role in that. So still a significant opportunity is the key message. So as this shift is happening, I thought this was a very interesting chart. So look back at 2001, 2007, and it is a US chart, but I think the message is still kind of relevant for us here in this room. So where was the wealth held in 2001, 2007? You can see about 90% of it was held in the silent generation or the baby boomers. Yeah, but as we look out from today where we sit 2021 and the forecast out to 2030, you can see that's changing significantly. That the baby boomers and the Gen X and the millennials will now hold around 90% of the wealth in the US. And how do these people want to interact with their bank? They want to interact digitally. So digital is happening, and the shift in the segmentation of the population, the demographics, is also leaning us into digital as well. So there's two things happening, and us as leaders in this industry and technologists need to be prepared to how the shift is happening. And I accept it'll be different in each different country, but you can see what the trend is happening here because that is the power of demographics. So the wealth is shifting, so how do we make sure we follow it? And then I just want to share this chart because I think it's relevant to the previous chart as well. And it looks back 2014, where did banks make their money? Yeah? So the revenue pools back in 2014, about 55% of it came from the bank's balance sheet and about 45% from origination and distribution. But we can see today that's kind of flipped the other way around. So 55% of banks' revenue now comes from origination and distribution and about 45% from the balance sheet. And not only is it the biggest size of the revenue pool, but it's also the most profitable. Return on equity about 20% in origination and distribution, but only about 4% on the return on equity on the balance sheet. And that's why I read an interesting quote recently is that, every bank CEO dreams of having a fantastic app, and every fintech CEO dreams of having a banking license or a balance sheet. So they're both trying to capture the same thing. But it's interesting, I think, that this is where the fintechs really wanted to operate, is in the origination and distribution, not on the balance sheet. And I think this chart tells you why. So it's very important for us as leaders to be able to make sure we're aware of this, and how do we want to respond to make sure that we're capturing the value. And this is probably going to continue in this direction as well. So that's, the digital shift has happened. The wealth is shifting towards the younger population who want more digital services. And, the basis of competition, more exposure to digital distribution, it's what's driving revenue and profitability. So all of that kind of leads us in to one final chart that I want to share with you. And that's around my own love, I guess, for payments. Because this chart really shows, what is the price to book ratio? Where is value today or in 2021? And you can see, payments companies, whether they're credit card issuers, monoline, merchant acquiring companies, buy now, pay later companies, payment specialists like Stripe, etc., they were 8.5 times more valuable than universal banks. So that phrase, there's money in them hills, there's money in payments. And it's really important that we understand that's an important franchise, particularly with a lot of disruption going on. Who owns the customer? What part of the customer value chain are we trying to own? The whole customer experience, the user experience, etc. That making sure the payments franchise is owned, I think is really, really important. And you can see in terms of the growth rate, it's almost twice as even the best of other segments of banking. Payments companies have grown twice as fast in terms of book value over the last 5 years. So there's a big shift to digital. It's where the value is, it's where the customers are going, and there's a lot of value in the payments value chain, particularly as it relates to digital. Just want to shift the thinking just a little bit before I finish. Can I just take a moment and just ask the audience, what did they see? Okay, how many people see the big white vase? Okay, and how many people see the two black faces looking at each other? Okay, it worked. So it was about 50-50. Okay, so what is it telling us? I put this up because I believe there's a lot of, it's very important for us to think about perspectives. That a lot of things are changing in the world, and it's changing so fast. There's always almost two sides to everything. And we as leaders need to be very open to that and be prepared for that in terms of our thinking, in terms of the strategies we execute, and make sure we are able to respond to that. In CR2, we've kind of coined a phrase, and thinking. So we want to think about one thing and another thing at the same time, because that's the way things are changing so rapidly. We have to be prepared for that. So when we think about what are we trying to drive? Are we trying to drive growth? Are we trying to drive profitability? The answer is we're trying to do both. We've seen a lot of payments companies and a lot of tech companies over the last period of time being taught this very painful lesson, that it's not just about growth at all costs. We need to understand how we're going to make money, how our segments are going to be profitable. I hope I've made the case for thinking about banking and payments. We understand the day-to-day interactions with the customers are really, really important, and they're made up of a whole plethora of small payments, whether it's merchant payments, whether it's P2P payments, whether it's government payments, whether it's recurring payments, and there will be others as well. That owning and managing that payments franchise is really important. So we need to think banking and we need to think payments. And that's at the center of some of the strategies that CR2 are executing. And I believe that's where digital wallet is going to play a really important part. We need to think banks and fintechs. It doesn't have to be one or the other. It can be both. And we need to be able to make sure we can bring fintechs into the banking ecosystem, into the payments ecosystem, because there's a lot of value to be had. We don't have to make everything ourselves. We can partner with people. And that's one of the core cornerstone strategies of CR2. And I'm very pleased to say we have many of our technology and product and business partners in this room today. And of course, getting a little bit more real, it's about choice as well. The consumer will decide. Is it cash? Will I still need cash? Will it be card? Will it be wallet? Will it be crypto? Will it be stablecoins? Will it be central bank digital currencies? It's a lot of ands that come, and each one needs to be satisfied, because each country and each business is in different cycles and different levels of penetration. So we have to make sure we're able to solve the and questions for us. And the future will bring more. There will be AI and robotics. There will be, I'm sure, central bank digital currencies and stablecoins. And there will be other things as well. And we're strongly of the opinion in CR2 that and thinking requires what we call platform thinking. So to be able to respond flexibly and adaptively to these and questions, we need to have a strong platform that's able to handle these complexities. So whether we're changing channels, I remember when I started out, it was the banks brought the channels. We brought our branch and we brought our ATM. And then it kind of shifted a little bit and we said, no, the consumer brings the channel. They bring their mobile phone or they bring their PC for internet banking. And now it's even changing again, where there's a lot more third-party channels with embedded finance, et cetera, et cetera. So it is adapting and changing all the time and having a strong platform to plug in channels. And we know the back office infrastructure and core banking of banks is getting more complex as well. And being able to unlock the value that's in there is very important. We're able to do that through a platform. And the last piece, of course, is all of our industries are now building across strong ecosystems. And the ability to plug in excellent partners who bring a lot of product capability to a platform, to an industry. It's really important that we have a strong platform to be able to plug those in. And you'll hear some of that from my colleagues today about our platform thinking. As I finish up, I just want to have a reminder, like CR2 are very focused. I spend a lot of time with our board and a lot of time with our shareholders about our investment plans. And we feel very proud that we have our head in the clouds on behalf of our customers, looking into the future, thinking about, well, what is out there? What should we be doing as a company to solve the needs, the consumer needs, and the SME needs on behalf of our customers in the future? But for sure, and I hope everybody has that experience, we have our feet on the ground. We understand you guys trust us with a very important part of your technology value chain, and that we have our feet on the ground, and that we are delivering for you every single day. So I want to just repeat my invitation again. Please take part in the conference over the next couple of days. Share your experiences. I've already had that enjoyment already of sharing a couple of experiences with different people that I've re-engaged with post-COVID. And engage. As Anna said, look, we're all here. It's a safe atmosphere. It's an intimate atmosphere. And we want to make sure that you get the benefit of the full conference that we have over the couple of days. And together, we can make an impact. Thank you very much.